Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BRINKER International INC quarterly report. BRINKER International Inc. offers a range of businesses and services through its casual dining restaurants. The company provides casual dining experiences under two main brands: Chili's Grill and Bar and Maggiano's Little Italy restaurant operations, and franchising services for both brands' ownership and development of new locations for the two restaurant brands. The stock price of BRINKER International Inc. has increased significantly over the past year due to several positive news developments. The company's strong financial results, particularly from its Chili's Grill and Bar brand, have been a major driver of this growth. Chili's has consistently delivered impressive results, including 5 consecutive quarters of double-digit same-store sales growth and outperforming the casual dining industry in traffic. The company's quarterly earnings reports have also been a key factor in the stock price increase. BRINKER International reported strong financial performances in each quarter, with significant increases in sales and earnings. The Q2 fiscal 2025 earnings report was particularly notable, with Chili's seeing a 31% sales growth, fueled by increased guest traffic and operational improvements. Analyst upgrades and positive outlooks have also contributed to the stock price increase. Several financial firms issued positive ratings and increased price targets for BRINKER International stock, including J.P. Morgan, Wells Fargo, and Evercore ISI Group. Overall, the combination of Chili's sustained strong performance, strong quarterly earnings reports, and analyst upgrades has fueled a significant increase in BRINKER International's stock price over the past year. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers. The main contributors to revenue growth are an increase in company sales, franchise revenues, and comparable restaurant sales at both Chili's and Maggiano's. Additionally, higher royalties from franchisees, excess tax benefits from stock-based compensation, expansion of international partnerships, and increased franchise partnerships have also contributed to revenue growth. Revenue decline drivers. On the other hand, several factors have led to a decline in revenue. These include gift card redemptions and breakage recognized as losses, restaurant closure asset write-offs and charges, loss from natural disasters, litigation and claims expenses, unfavorable comparable restaurant sales, and lower traffic. Net income and profit margins. A year of growth, the company's net income experienced a significant surge, increasing by plus 158% from $38.5 million in 2024 to $99.5 million in 2025. This substantial growth can be attributed to an increase in operating income, which contributed $58 million more in 2025 compared to the previous year. Profit margins also underwent a notable transformation. The gross profit margin rose from 4.7% in 2024 to 8.6% in 2025, while the operating profit margin increased from 5% to 8.7%. However, conflicting information on page 18 suggests that profit margins may have decreased due to increased other charges. Nevertheless, the overall trend indicates a substantial improvement in profit margins, with an operating income margin increase of 77% from 4.9% in 2024 to 8.7% in 2025. The company is generating a significant amount of positive operating cash flow, with a notable increase from the previous year. In 2025, the net cash provided by operating activities reached $120.8 million, up from $62.8 million in 2024. This represents an impressive growth of $58 million, indicating a substantial improvement in the company's ability to generate cash from its core operations. The company's debt level and interest expenses have shown mixed results over the past year. While there are instances of slight increases in debt levels, such as a $0.2 million rise from $346 million to $346.2 million. Other pages reveal significant jumps, including a $105.1 million increase from $447.6 million to $552.7 million. Interest expenses have also seen fluctuations, with some pages indicating a decrease of 26.6%, and others attributing a similar decline to lower average outstanding debt balances. Overall, the data suggests that there has been no uniform change in either debt level or interest expenses. Management is optimistic about the company's future prospects. They plan to enhance guest experience through quality service and great food, while creating a fun atmosphere at Chili's. To achieve this, they will simplify menus, offer value options, increase menu pricing, and improve digital experiences. The company aims to expand internationally by partnering with new and existing franchise partners for Chili's development agreements. Management expects positive comparable restaurant sales due to increased traffic, improved menu item mix, and higher prices. To execute their long-term strategy, the company will focus on generating cash flow and maintaining a solid financial position. This strategic approach is expected to drive growth and success in the future. The company has a history of buying back its own shares, with the most recent instance being the purchase of 0.9 million shares for $134.5 million. This indicates that instead of distributing profits to shareholders through dividends, the company has chosen to use this capital to reduce the number of outstanding shares and potentially boost earnings per share. That concludes the financial summary for BRINKER International INC. Feel free to comment below, and I will be happy to answer them when possible.